Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 12th of March 2018. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at overnight changes and price moves to be aware of. It's a Monday, so we take a look at things from a weekly perspective. I just want to flag two groups of activity here. First of all, in the currencies, the Aussie dollar and the New Zealand dollar against the US counterpart. Both making good gains. The Aussie up by around 1.39% over the last 7 days, and the Kiwi gaining by a respectable 1.24%. Switching back to North America, dollar Canada and dollar Mexican peso also in the spotlight, with dollar Canada gaining 1.2% and the Mexican peso gaining around 0.98% against the US dollar. I think the latter moves here, Canada and Mexico, are based on the potential carve-out from US steel and aluminium tariffs. In the world of cryptocurrencies, it was a very poor week for Bitcoin, Ether and Ripple, each down by more than 14%. However, they do appear to be fighting back, as you can see shortly before we recorded the video. For instance, Bitcoin was up 8.96% so far today. Right then, what's on the calendar? Events that may move the markets today. First of all, two things to flag that are ongoing. A Eurogroup meeting, a meeting of the Council of Finance Ministers in Europe, and a holiday in Australia. It's Labour Day there today, so a 24-hour holiday in Aussie. As to data we've had machine tool orders out of February, a year-on-year figure from Japan, up at 39.5%, so declining relative to last month's read. To come at 10 a.m, industrial production data out of Greece for January, global trade balance data from Portugal for Jan, alongside some Portuguese CPI inflation data for the month of Feb. Then a break of around 4.5 hours until late afternoon and into the US, where we'll be seeing how the market prices 3, 6 month, 3-year and 10-year US paper auctions in all four of those maturities. 1800 will see the release of the monthly budget statement for the US from February. Obviously that's an ongoing issue as the US government continues to run out of money sporadically. 2345, our only central bank speech of the day, and this one from the Royal Bank of New Zealand's Governor Grant Spencer. 2350, if you're still in the market, you can see domestic corporate goods price index data from Japan for February, both month-on-month and year-on-year. Right, breaking news and comment then that's caught my eye overnight and over the weekend. And first of all, Asian equities have started the week in a positive mood following Friday's upbeat US unemployment data. China has voted to end its 2-term limit on their country's leader, allowing President Xi to theoretically serve an indefinite term. Japan and the European Union have lobbied the US for exemption from the recent steel and aluminium tariffs introduced there, and the UK is mulling fresh sanctions against Russia in the wake of the Salisbury spy poisoning. So as relations appear to be warming with North Korea, they could be about to take a turn for the worse with Russia once more. Right then, food for thought, something to take away with you into the trading day and the week ahead, and why not think about this? A month after the blow-up in the world's major equity markets, calm seems to have returned. And although many of the measures of volatility are still elevated and above recent norms, they are largely unwinding, it seems, according to weekly data from the Chicago Board Options Exchange. And here is a selection of volatility indices as calculated by the CBOE, and the readings last week and at the close, I should say the week of the 2nd of March and the week of the 9th of March ending. And here are the changes, and as you can see, the vast majority of those show a significant downturn. So perhaps volatility is returning to something like its previous levels. Can't be completely certain they're out of the woods yet, but I think that's a pretty good indication that at least the bubble is deflating. Right then, risk warning time. Please take a moment to read the risk warning, because trading CFDs and foreign exchange and margin can be a risky business. If you're in any doubt about the risks involved or the suitability of the products for you, then please do contact your Pepperstone account representative.